Hi everyone, and welcome back to another episode of Goodhue LA. Thank you so much for tuning in, and as always, please be sure to click the subscribe button so that you never miss an episode. And while you're at it, leave a comment. In today's episode, we're going to talk about what you need to provide to get a letter of pre-approval for your home loan. So you're in the market for a home, you're going to meet with the lender, and you're going to have to submit a few documents to them to get the ball rolling on the home buying process. Now, of course, this is definitely the first step you should do, because in this day and age, you can't really go into open houses anymore, and some sellers are actually requiring for the buyers to provide a letter of pre-approval and or proof of funds. So no more we're just shopping or curious. They want to make sure that you're real. So what is a mortgage pre-approval? Sellers and agents want to know someone is legitimate and can close, so they are requesting the letter of pre-approval. Now, don't get it confused with the pre-qualification letter. Both of these involve talking to a lender. However, with the pre-qualification, they're kind of just casually browsing over your documents, say, yeah, you could get a loan, whereas the letter of pre-approval takes a more in-depth analysis and will give you an exact amount of money, a loan amount that you can qualify for. Let's get down to the nuts and bolts. What do you need to provide? One, they're going to want to know how much cheese you're bringing in. So obviously your income definitely plays a big part of that. Specifically, your debt to income ratio. So they want to know how much you owe in debts versus how much you bring in. And this ratio should be no higher than 28%. To show your income, you'll need to provide W-2 forms for the last 2 years, pay statement for the most recent month, and 2 years of tax returns. Now, if you're like so many Angelinos and living in the entrepreneurial capital of the world, you might have a business or self-employed. In that case, you will need to provide a Schedule K form from the IRS. Now, you'll also need to provide to the lender that means you are financially stable. You'll need to provide documentation of your employment. You'll have to provide a list of payment obligations, and they'll combine all of these to a little formula to calculate how much of a loan you'll be able to get. Now, for the mortgage pre-approval, you'll need to supply bank statements for investments, 401ks for at least 3 months to show that you have the assets to liquidate for the closing. They're also going to want to know your credit score. And as I talked on in the previous episode, it doesn't need to be as high as you think. It can be as low as 520. So always good to get that credit score up so you get a better rate to save more money in the long term. Finally, you'll need other documents such as your driver's license and social security card. These are the things you will need to get your letter of pre-approval for your home loan. As always, I hope you found this information useful. Thank you so much for tuning in. If you have any questions, I'm here for you.